right, so let's go to the advanced questions first. Okay, so is there a risk of having a global recession this year? I think this was already answered a while ago. Maybe we could focus more on the second question. If a recession happens in the US, how do you expect the Philippines to be affected? April, do you want to go first?
Yeah, I mean that's my major concern really. Because well, maybe our GDP won't be affected, but the problem is, okay, I guess it's twofold. If the US suffers from a recession, what will happen to the stock market? And my concern is I feel that there is a downside risk because the valuation of US stocks is still a little bit expensive. And if the US market goes down, then unfortunately, in the past, we have seen the Philippines sold off as well. Okay, which is why we are recommending, sticking to values, because at least if you stick to values, I don't think that the downside risk is as significant. And secondly, if you have some cash or your dry powder, it actually is an opportunity for you to buy stocks at a much cheaper level. So think about the '08 global financial crisis when Philippine stocks were sold off steeply, and it rebounded right away a year later, and that allowed investors to make a lot of money.
Okay, thank you, Sir Juanis.
Well, the only thing I think I'll add is really markets will look to see how far the US market goes down by. If the US market goes down steeply, then I think it's very hard for us to go against that. So we may quite be affected if we do see that type of scenario. But let's say, for example, the US pulls back and does not break the previous low. I don't think that's going to harm our market. It should just allow them to proceed in that consolidation I was talking about earlier and eventually work its way out of it once things start to stabilize.
All right, so it could definitely decouple, but only to a certain extent. I mean, not too much, I guess. All right. Okay,
yeah, I think it's a given though that this time around, I think the ingredients are there for emerging markets, including the Philippines, to outperform. Maybe if we go down less.
Yeah, because of the relative underinvestment for the last 10 years for emerging markets. All right, that's clear. Okay, thank you. Next one. What are the prospects for the Philippines with the reopening of the Chinese economy? April?
Yeah, I think it's better. We should benefit from more tourists coming to the Philippines. Okay, and of course, it should address some of the inflationary problems by addressing the supply chain bottlenecks.
Sir Juanis, are you able to look at some of the charts in like China or and what are they looking like?
Yeah, there are some that look much healthier than where they were. In fact, I showed the Chinese index earlier on, and it looks quite primed to be able to continue to make its recovery. So I think that will be quite helpful. And I agree with April that will unlock some of the supply issues that will contribute quite a long way to everyone.
Okay, great. Okay, next one. What is your outlook for the peso dollar exchange rate for 2023? So from Philip and two others. Sir Juanis, do you want to start with your maybe technical I think you've mentioned this already a while ago. If you can just
I covered I think we've seen a good correction already, first in the peso, especially also into the dollar. There's some room for a little bit of a rally though, but like I'm saying, I think if there will be a rally, it will be temporary, and then it'll probably try to be able to flatten back off. So I think the trading ranges will start to narrow. So I'm not looking at any heavy currency risks from now.
I see. Great. April?
Yeah, so I think the direction will largely depend on the US dollar. But if the US dollar stays where it's at, I think a slight depreciation could happen, assuming that the dollar does not move. Because, of course, the Philippines has what we call a twin deficit, which is a budget deficit and current account deficit. which is not so bad anyway, because one part of the current account deficit is, of course, going to investments towards productive capacity. But then I guess, unfortunately, that would lead to a slow depreciation of the currency, at least in the next year or so.
All right. Okay. Okay. Next one. On inflation, if inflation continues, will the Philippine stock market still rally? By Benjamin. And during high inflation, which sector will benefit? So, April, do you want to start?
Yeah, okay. I think that's one of the key risks for the market. So if you recall, for example, in 2018, when we had a high inflation environment, and the BSP was raising interest rates, the stock market went down. So that's not good. But this time around, I think, which is why I highlighted it as one of the risks. But at this point, I think the likelihood of inflation to accelerate further is much less. First, because commodity prices are going down. Second, because the peso is stronger. So those two factors should help a lot. And then third, remember the tariffs on imported food products have been reduced. So I think those three factors should help with addressing inflation.
Do you want to answer like which sector could potentially benefit if ever inflation does remain high?
One sector which is why people like it is the banking sector, because at least with higher interest rates, they enjoy higher margins. At least at this point, they're still enjoying that, and of course they still have that benefit from reopening and recovery of the economy. It just depends how much the high inflation environment will hurt the economy and businesses. But assuming that we see more of the 2022 kind of inflation, where inflation was up but the economy still did well, then banks will be okay.
So if I could ask one more follow-up now, because I think this is quite interesting. Nobody's really talking much about inflation. No? I mean, going back to our investor survey a while ago, this wasn't one of the top two concerns, right? So I guess my question is, when will you start getting worried about the high inflation? I mean, how soon does it need to go down? Or else you will be concerned. I mean, do you have like does it have to come down in the first quarter, first half? I mean, do you have a number, or we can't go past 8%, 9%? I mean,
I think in general we wanted to peak already in the first quarter.
Okay.
And then start to go down already. I mean, when we look at inflation also, maybe we also look at the month-on-month figure, not only on the year-on-year, because there could be a base effect, diba? But on a month-on-month, then when we look at it as well, there are a lot of things that we actually look at, not just the headline figure. And of course, also when the situation that the central bank increases interest rates, how would that impact profitability? Or the economy? Is that something that the economy can easily absorb? Similar to, for example, what is happening in the US right now. The Fed is increasing interest rates, but then looks like the market is saying, well, the economy is strong enough to absorb a higher interest rate environment, then that's okay. But if the economy looks like it's weakening because of those high interest rates, then that's another story.
Okay. Sir Juanis, any thoughts on inflation?
Well, to answer the first statement directly, I said if inflation continues, yes, I think so, because that has not been priced in. And clearly the market will have to make an adjustment if it stays up there very long. With regards to the second, I think April answered that already.
You mean if inflation continues, then the Philippine market could be affected?
Yes.
Could be. All right. Okay. Thank you for that. Next one. What are the possible catalysts that may ignite a strong bull scenario in the PSEi? From John Michael and two others. And what's your outlook for the stock market this year? So more on the PSEi outlook. So I think you've briefly talked about this in your presentations a while ago separately. So if you could just like highlight again like the most important points, I guess.
Yeah.
So Juanis, go ahead, Ita.
Yeah, I think for me, I've been giving much thought to it because, it seems like I kind of ask myself, am I a permabull? Do I always, just say positive things? But, I'm thinking, could this time be different? I think what makes this time a little bit different is that in the past, if I'm a foreign fund manager and I look at my alternatives, the US always seems better, right? But then this time around, okay, well, yeah, Asia doesn't look perfect. And then Philippines, yeah, it's cheap, it's been cheap, I'm not there. But if I look at today, if I look at Asia, emerging market, Philippines, and all of ASEAN versus US, I think, it looks better. The fundamental story really looks better versus the US. Again, as I've said earlier on, if they are wrong and the US does, which is a very possible risk that the US falls into a recession, you have a downside risk because the valuation is expensive, right? But let's say Philippines, Asia, China, valuations are so cheap, and of course we are less vulnerable to what happens in the US. And of course, China is already doing all of this stimulus because the economy is already so weak. So we're more advanced in the cycle because we haven't gone anywhere for 10 years. So in that respect, we're not perfect, but we're better. So if I'm a foreign fund manager looking at my alternatives, I think, there really is room for emerging markets to outperform. So yeah, for me, that's what is different this time around.
All right. So, and in contrast, the US market, I think for the last 10 years performed very well. I think they times three the index, right?
And
So
also, I'd like to share another risk that, people talk about a lot, or hotly debated right now. The question is inflation going to go down and return to pre-pandemic level, or is inflation going to stay higher for longer? So that's another risk that a lot of people talk about. And the idea was, okay, I think a lot of people right now accept the reason why the US was so popular the past 10 years was that you had that tailwind of interest rates in the US going down. So you could see multiple expansion, right? And of course, you see all the the internet stocks, tech stocks going up, even though they weren't profitable because of all the cheap money. But now you don't have that anymore. What if we have a scenario where inflation stays higher for longer, and central banks, because of that, they don't want to cut rates as much. So what would happen is only, you would have probably the standard 8% EPS growth. So probably an 8% increase in the S&P 500. So wala ka ng multiple expansion. You don't have that kicker that comes with the lower interest rate, right? So that's another reason why I think foreign fund managers are a little bit more excited about emerging markets now. I mean, I've never heard them talk so positively about emerging markets, and emerging markets being a consensus call, similar to how it is today.
Yeah, so in a sense, the weakness in the US market is in a way a blessing for us emerging markets because there's they don't have a choice. They have to come back to us after 10 years.
Yeah.
All right, Sir Juanis, what are your thoughts on the PSEi outlook?
Well, earlier I think I produced some things that have not been priced in. So what could cause a catalyst? And I think stop rates from climbing and let it come down. That's one. Yes, I agree that help from China could also do it. If we could also see a cessation of conflict in parts of the world, that will also be anything that can help unlock the supply issues that struggles that we've been seeing. I mean, that would help quite a lot.
And
By the way, just to correct it, although April said market hasn't gone anywhere in 10 years, that's only because 10 years ago we're at the same index level. But in reality, in 2018, we came from 9,000. Okay, so it was from 9,000 to 20 and went down for about 3 years. That's the reason why we're still playing catch up today. But in reality, the market did climb up to 2018.
all right, okay.
Just
Sir,
so things don't look that gloomy, okay, April?
Okay.
So honestly, if I may ask, no, a while ago you mentioned one of the key positive developments are the golden cross across multiple charts, multiple countries or asset class. Is this really the in a way parang the best case scenario if you're a technician, or are you still waiting for any other technical indicators to confirm the strength of the market? I mean, are we still waiting for some more
No.
indicators, or is this it? I guess.
Although the golden crosses are good, durable confirmations, I believe they're actually lagging already. And we've probably seen basing patterns already take place back in November, December. So what you're seeing right now is already some confirmations. I'm not going to be waiting for anything more. The only thing is we are just overbought. So the market just needs to breathe in, fix that, and then it should allow it to be able to continue.
All right. Perfect. Okay. Next slide, please. A question on stock and sector picks. Okay, so for this one, this is one of the most popular questions, no? So which sectors or subsectors are your top picks for 2023 and why? And with what stocks will you recommend for 2023? So from Christopher and Christy. So you could choose one or the other. You could give specific stocks that you like or sectors that you prefer for 2023. Sir Juanis, you want to go first?
Well, I did focus on what I think everybody's focusing on only because that's where the strongest stocks lie. And that would be banking and the consumer related issues. There are individual stocks that if you do a bottom out will probably also come out, but I wouldn't say it shows sectoral strength. So I would not include that. I would just trade it independently. But banking and the consumer related one seem to be the stronger one for me.
And just to remind everyone, Sir Juanis gave his four issues for banks and consumer stocks a while ago. No? So you could definitely review that. In a sense, magkakamukha rin lang naman sila, like for most of the banks. So so that will be very helpful. Okay, April, how about on your end?
I think I shared na rin, banks and consumers, we like them, but the reason why we're not discounting the other sectors like property, for example, is because we feel that once the consumer stocks and banks become expensive, there could be a rotation into properties because properties are not expensive anyway. They're very cheap,
Looking at your picks, boss, it's not really like in one particular sector or two sectors. So it's mostly across different sectors. So is it fair to say that it's more of a bottom up view, as long as it's cheap and there's no issues with the company, then they should also benefit from all the bullishness in the market. Is that fair thing?
Yeah, I think that's a fair view. And also PLDT, I feel that PLDT is it's a non-consensus call. I feel that a lot of people are bearish on that because of the first is the peaking of demand for fiber broadband or the maturing of that industry. Second is the budget overrun issue. But they are failing to recognize the benefit of the tower sales on the company's profitability going forward.
All right. So again, for our audience today, just try to review April's picks from a while ago, and also just like to advertise, April also writes her own calling the shots report once a month, so you could definitely follow that also for more timely recommendations. The stock picks will always be there at the end of the report. So if you want an updated pick every month, then you should definitely watch out for that. All right. Thank you, April and Juanis. Next one, do we have more on strategy? What's COL's opinion on most analysts' recommendation to go fixed income and lessen equity exposure given the macro environment from Ray? See, that one first kasi medyo slightly different yung second question. So, April, do you want to talk about this?
Yeah. So during the mid-year market outlook, I talked about that. And I also agree that it would be a good idea to invest in fixed income. And I think also, I forgot the name of our seminar, I think the multi-asset strategy. I talked about that because, okay, between stocks and bonds, the bonds would be a surer bet. But of course, potential returns could be less because you think about it. Right now, you have higher interest on fixed income, higher interest on your bonds, no. But assuming if the economy weakens, or let's say that we have a recession in the US, diba? What will happen? The Fed will cut interest rates. Okay, and if the Fed cuts interest rates would go down. If there's a recession, interest rates would go down. You will enjoy, an appreciation in the capital value of your bonds. No? Secondly, if the economy is strong or inflation is high, well, we aren't expecting inflation to stay at 8%. What we're talking about is maybe the new normal is a 4% inflation, which is higher than a 2%. But still, you have some downside risk on interest rate. At worst case, the price of your bond is fixed, but at least you're able to lock in on a higher interest, diba? So it's more like it's either your break even or you're positive, because you're able to lock in on higher interest rates, higher income, or you're able to enjoy also some capital appreciation potential. So which is why fixed income is I think is also good to buy at this point while interest rates are still elevated. And then lessening equity exposure. Well, I also talked about that. I thought about it. Should we just go all fixed income? And the reason why, at least in the Philippine setting, I'm not going zero on equities because the valuations are really so cheap. And yun na nga, what kind of returns can you get from fixed income? You don't get a lot, but the potential upside in equities is just too much. And also, of course, our equity picks, a lot of them give us good cash dividends as well, of at least mga 2 to 3%, no? So you're paid to wait anyways, and they're so cheap. So I don't mind holding some equities and some bonds.
All right. So both serve a purpose. No? Both are good. All right. So Juanis, do you want to take the second question, like best investing strategy? Value investing, dividend growth, or index investing? What are your thoughts? Sir?
I don't know if that question is for me, but I will just add to what April said, because I will use the hat of a trader. Maybe when equity markets were on their way down into a bear swing, there was a possibility for me to shift out and go into FI or fixed income. But now that we're seeing a recovery, bottoms have clearly been made, and she says that the values of some of the stocks are now ready to get unlocked. I mean, I would incredibly lean towards the equity side rather than the FI side.
Okay. Thank you for that. All right.
I want to add lang. Syempre,
go.
sorry, I know there's so many questions, pero
it's okay.
I think more of, yung index yan. Kasi that has been the uso. before, di ba? You just buy the index, di ba? Index, di ba? But now, of course, the argument is baka may active investing na, o, di ba? Kasi nga, if on an environment where you have falling interest rates, you just want to benefit from the re-rating of the whole market. So you don't have to be smart, just buy the index, passive investing. But now there is a lot of talk among fund managers. Kasi nga, if you just expect the market to go up single digit, you want to do some active management. You look for the companies that will really be able to generate rapid earnings growth and do some alpha or active investing. So mas yan ang pinag-uusapan ngayon. No?
All right. Okay. Okay. Thank you very much for that. Let's go to the next one. Okay, so I think this one was already answered for the MSCI. Just to reiterate, there are rumors, just rumors of Globe, ASEN, and Meralco being removed. For the PSEi, it was already announced just an hour or two ago. Union Bank and DMC will be included, replacing RLC and Megaworld. So I think we can skip this already and go to the next slide. Okay, okay, this one. Okay, I think this is the last group questions from Deldar. What is the greatest risk for the market in 2023? So, Sir Juanis, do you want to start?
Well, I think that can only be either extendedly high interest rates or an added war.
Added war. So, further escalation or new
Geopolitical.
one. Knock on wood. No? So hopefully, wala naman. Okay, April?
Yeah, I think it's the risk that the US suffers from, a hard landing. That our hopes that the US will just, be able to absorb all of the rate hikes of the Fed does not materialize.
Okay, okay, that's very clear. Okay, thank you again for the questions also and for the answers definitely. And let's now move on to the live questions. We'll try to get as much as we can before maybe 6 o'clock. I think that's probably like the hard stop. Okay, so which industry will strive during the recession, especially if recession happens this year, from Arnold? April?
Of course, the more defensive sectors in the Philippines, that would be your power sector. Earlier on, I wasn't able to talk about REITs. So, in general, most of the REITs are property sector REITs, but we do have C-REIT, which is a power sector REIT. So that might be a good pick also. And maybe telcos like PLD would be good. So more defensive.
Okay. Sir Juanis, do you want to add anything?
That's okay. It's more up her alley.
Okay. Next question. Can we go to the next question, please? Okay. Given that the GDP rate in the US is relatively high at 2.9%, so this was disclosed, I think, last night, are we still looking at a recession? So parang tinanong ko to sa'yo kanina, April, unofficially. So natanong rin pala. So what are your thoughts, April?
Yeah, I mean, I think it still is a possibility if you look at the other indicators. Because, well, for example, hindi ko pa masyado na pag-aralan pero yung government spending was one of the strongest drivers, no? Consumer spending was slowing down but still positive for the fourth quarter. And the concern, I think, in 2023 is, for example, first of all, we now hear the government talking about the debt ceiling, di ba? And of course, they have a bigger budget problem than we do, or the bigger debt problem, because remember, their ayudas were so significant, and unfortunately 2023 they won't be giving any more ayudas. Apparently last year they gave something to the consumers, and this year we won't have that, and high interest rates. So I mean, it still is a threat. I think it depends on the labor market. Because ang maganda lang this time around is because businesses are worried about rehiring people. They're not letting go. That's why the job market remains very strong and people can still spend money. So I think that is one source of strength in the US. But, if business becomes really bad, then maybe, it still is a possibility in my opinion.
Okay, Sir Juanis, thoughts on potential recession?
No, it's okay. I think April called it. I'll just take anything technical, Charles, so that we
Okay.
can move faster.
All right, okay. Next slide, please. What is your conviction on the current PSE index? What is the current stage cycle of our market? Recovery, weak or strong bull? So I think this is the question for you from Cesar. Sir Juanis.
I would say we're in a recovery market. I wouldn't say a strong bull, although prices are moving up strong, but we're in a recovery market.
Okay, all right.
And
great,
I'm quite confident that we'll probably still continue to see gains after the correction.
Yeah, okay. Just be wary of potential corrective movements.
Yes.
Okay. April, do you want to answer this one?
Yeah, I would think more of a weak bull still at this point. Still a lot of cautiousness. And the indicator I would look at would be the value turnover. The average daily value turnover is still very thin. So it just goes to show you that there still is a lot of skepticism out there.
Yeah, I agree. Okay, next question. Thoughts on REITs, particularly A REIT and M REIT for 2023 from ACE.
Okay.
April,
Yeah.
thoughts?
So yeah, I mean, one of the other reasons why REITs have not performed as well as they should is because yun na nga, the office market is the office market is suffering from two headwinds. The first is the high vacancy rates of offices. Second is, in the past, at least, if you had PESA accreditation, you would corner all the BPO market because the BPOs require PESA. But then remember, because of the CREATE bill, I think they could go to the BOI and enjoy the same benefits in non-PESA buildings. So that has, I think, tempted some of the locators to, at least give it a try. Let's try these buildings because they're cheaper and they're also new buildings. So those are the two factors that are hurting the outlook of REITs for 2023. Now between A REIT and M REIT, we'd rather go for A REIT because A REIT actually has a more diversified portfolio that is not only all offices. No? For M REIT, there are issues. I think the dividends in 2023 might disappoint because when I think I talked to Richard Laneda, our property and REITs analyst, and he said, based on his discussions with M REIT, there were some costs that they did not anticipate that they had to book. And secondly, 2023 M REIT will start to be paying rents on the land. So that will negatively affect how much the dividends will grow. And thirdly, given how depressed the prices of REITs are now, we might not see asset injections or growth via acquisitions. And because of course the funding cost is also expensive if you borrow money.
Okay. Sir Juanis, I don't know if you could recall the charts in your head, top of your head. So, but
Yeah,
any thoughts
yes,
on
I
this?
can. There's both actually are still in recovery swings. Both of them have hit an area of resistance, and that's why they're both consolidating now. So if they can prove to be resilient and punch through, then we might see some short-term continuation. But like I'm thinking, Feb, March, we may see some similar reactions come into those after the rallies that they've made. So maybe after the first quarter.
I see. Okay. Thank you for that one. Next question, please. Do we have more? Okay, Juanis, based on your charts, what do you think will signal reversal or turning point of the rally in equity markets? Bond yields or USD?
I think if you're talking about the local index, I think that would have to break all moving averages again to be able to flatten itself and come back down to its previous low. Even if it comes out to a significant correction, but it makes a higher low, that's still part of a recovery swing. So I don't have that in my mind or seeing that possibility. In terms of bond yields in US dollar, I painted out a scenario there could be a rally, but I don't think the rally will come back from where it went. So again, that will be temporary and not so threatening on my perspective. So I'm not viewing those as potential risks.
All right, okay. Thank you. Do we have more questions? Possible insights of our mining industry. Oh, sorry, which one do you do? We do this one first? Okay, so Juanis, from your experience, how durable is the formation of a golden cross to signal a reversal of a trend? Should this be the cue to deploy excess cash to just buy and hold if one has a one-year view from Francis?
Okay, earlier I said it's supposed to be a more solid expression of a bullish condition if you see a golden cross, because number one, it's a lagging indicator. That means it would only show up if you've seen a significant advance already, right? And that means that it's not just going to be a small rally. This is something more substantial. That's a reason why you're seeing a golden cross or a death cross. But you look at it from this point of view as a trader, by the time you see a golden cross, the price has already rallied in a significant amount. So what has to happen after that is that, like, that's why I've been expressing, wait for the pullbacks, because in the pullback should be able to diffuse that overextended situation. And as long as that golden cross remains in that pullback, then it should be able to present that opportunity. And if you want to do a buy and hold, the only risk I think that you'd be doing is that you'd lose a little bit of the frothiness of the profits that you've had. So if I may suggest, what I would do is I would hold maybe half to a little bit of a good size of my position, but I will take some of it and then buy it back later. I think that would be a safer way to play this out.
All right. I think that was clearly explained. Thank you, sir. Next one, do we have more questions? Possible insights of our mining industry, specifically nickel and coals, especially the EV and renewable industry is booming. Will coal demand go down this year, and will nickel be the most needed commodity? From Christian. April? Insights on the mining industry?
Actually don't know. I mean, it depends. I mean, okay, the last time I asked George about this, he said, yeah, it will benefit from EV, except that, EV is just such a small portion of the demand right now. I think it's more of, the economic recovery. And we're seeing, for example, Juanis showed a while ago, copper prices going up, nickel prices going up, and it might be reflective of the reopening of China. With, expected more output, industrial output, better economic growth outlook, etc. Will coal demand go down this year? I don't know really if that will be the case, because, although we do talk a lot about renewable energy, it takes time for the dependence on fossil fuels to go down by a substantial rate, such that, we won't need it anymore.
Okay. So maybe we can take one last before, I think we really have to, we're already pushing the time. Okay, so one last question. Can we bring it up? Okay, on mutual funds. Okay, what is your view on mutual funds? Should we invest in them? From Joanne. April?
Ako, it depends on you. Kasi if, let's say, okay, the first is if you're a small investor, and it's hard for you to diversify and you don't know what to do, you're a beginner, then it would be I think it would be a good alternative for you to just buy a mutual fund, especially for a newbie and there's no particular stock that you like. Okay, but even if say you're a bigger investor, but then you only like maybe 2, 3 stocks. So maybe it's good you buy, say you have like a core satellite strategy, like you have your core like mutual fund, then you have your satellite, your stock picks, then you do your trading on the side. I mean, that could be a good way to buy mutual funds. So yes, I think buying mutual funds is good. And also maybe if you have, say, you want to do a peso cost averaging. Kasi pag individual stocks, then you do peso cost averaging. The details are quite cumbersome. But if you just pick a mutual fund to do your peso cost averaging investment strategy, then that would be an easier way to do your long-term investments in stocks.
All right, so an easier way, a faster way to have an exposure. Okay, Juanis, do you want to add anything or? Yeah.
Well, I think mutual funds has its use, like she said, depending on who you are and what your goals are. If you're also, whether you're small or big, I don't think that would really matter, because if you're a big investor and you're trying to be able to pump some investments into illiquid stocks, might be a problem for you. For you to be able to, you can buy any amount you want of a mutual fund off the bat. So, I mean, that's a huge advantage. So at least the liquidity is not a problem. Second, there are mutual funds that are quite placed on intent. Could it be on dividends? Could it be on exposure to the global market? I mean, you can choose. And I mean, I think that's an advantage. It allows you a wide flexibility of choice. Now, of course, if you are a stock picker and you're here to try to get as much gains as possible, then I would agree with what April said. Maybe you can have a good sized position in mutual funds as a base and use your trigger funds to be able to do bottom up approaches on some of the stocks. And I think that might be eventually down the road, that's probably what's going to be an experienced market a trader would eventually become.